Imagine owning a basketball team, courtside seats for life, private boxes for hosting clients, friends, and family, an all-access pass, private jet flights with the greatest athletes in the world, and of course, early and exclusive merchandise. If you're wondering how any of this is relevant to this week's video, well, it's not. But Gabe Plotkin, who I will cover in today's video, is a majority owner in the Charlotte Hornets, and I also thought it would make for a good intro. But you're probably not interested in owning a sports team, which makes sense since you clicked on a finance video. Gabe Plotkin is an American businessman born 1978 in Portland, Maine. He is the founder and CEO of the former Melvin Capital Management. There's not much information on my guy Gabe, but we do know he was raised in a modest Jewish family and he graduated magna cum laude from Northwestern University with a bachelor's degree in economics. After graduating, Plotkin got a job at Henry Crown & Company before joining North Sound Capital as a consumer stocks analyst. In 2006, he joined the infamous SAC Capital Advisors, a hedge fund founded by the Dawn of Wall Street, Steve Cohen. Gabe Plotkin was one of the top traders at SAC. Knowing what we know now, that's not something you would brag about, if you know what I'm saying. Nevertheless, he managed one of the firm's largest portfolios valued at over $1 billion. Because of his great success at SAC, in 2014, Steve Cohen invested $200 million in Plotkin's new hedge fund, Melvin Capital Management. All in all, Plotkin managed to raise $1 billion for his new hedge fund. The greatest hedge funds we have today had early investments of $50 million at most, but Plotkin managed to raise $1 billion, which is rare even in Silicon Valley. Plotkin made it known early on that Melvin Capital would be a very human-intensive hedge fund and would focus on short selling. In hindsight, someone should have warned him about short selling. Between 2014 and 2020, Melvin Capital averaged 30% annually in returns and a 47% ROI in its first year, ranking it second in Bloomberg's 2015 list of top-performing hedge funds. Melvin Capital was outperforming Steve Cohen's new hedge fund, Point72. In 2015, the fund took notable short positions against Sun Edison and JCPenney, both of which ultimately went bankrupt. To sum it up, from 2015 to 2020, Melvin Capital was a really successful hedge fund. Then 2021 came around the corner. In 2017, Melvin Capital began shorting GameStop stock, betting the strong retailer stock would decline. GameStop was under pressure from declining physical game sales and retail competition. Around late 2020, retail investors on Wall Street bets, including the man himself, began noticing GameStop's heavy short interest, over 100% of available shares, which led small buying which pushed the stock modestly upward, inevitably drawing attention. In early January 2021, GME stock price was at $20, but after Wall Street bets investors coordinated buying, the stock jumped to $90 in the same month. You just had to be there. So after the stock jumped, Melvin Capital began covering positions, causing a partial short squeeze. During the short squeeze, Melvin Capital lost approximately 53% of its value, leading to a $2.7 billion bailout from Citadel and Point72. But the damage was already done. At the end of 2021, Melvin Capital finished the year down more than 39%. In May 2022, Bloomberg reported that Melvin Capital planned to close its funds and return the cash to its investors. According to sources, Plotkin earned more than $800 million in compensation in 2020, losing more than half of that during the short squeeze. At the end of the day, the man made enough money to purchase a majority stake in the Charlotte Hornets in 2023 from Michael Jordan. The core focus of Melvin Capital's strategy was long-short equity, meaning they buy stocks they think will go up, they short stocks they think will go down. They study company financials, management quality, competitive position, and industry trends. Take positions based on corporate events like mergers, earnings announcements, or market shifts. As I mentioned, Melvin Capital was heavily involved in shorting stocks they view as overvalued or declining. They employed a team of analysts and traders for research, monitoring, and execution. TLDR, Melvin Capital's investing strategy was the classic hedge fund strategy, but a little more focused on short selling. At its peak, Melvin Capital reportedly managed around $12.5 billion. Melvin Capital went from 0 to 100 within seconds. Gabe Plotkin's connections with Steve Cohen, a legend on Wall Street, gave him access to billions of dollars. But one bad trade caused the entire empire to crumble. Short selling is an art that only a few have been able to master and survive. Melvin Capital, unfortunately, isn't one of the hedge funds that survived.